Hey guys, Darren here. Thanks for joining the Stock Options Market Weekly Update for the week of September 25th, 2023. We've got some great things to talk about in the market this week. We're going to cover what we did last week, what we're looking at this next week, as well as touch on inflation, interest rates, and economic data, and then finally go through the trades that we have on the option trading platform. I think it's super important that we understand all the different strategies and the ways that the rich are getting richer so that we can do the same and profit in any market. Please remember to hit the like and subscribe button so that you are informed of future videos and we can get this video out to as many people as possible. Also, there is a free options workshop in the link below, totally free. It talks about the benefits of trading options over buying stocks alone outright. Disclaimer, I'm not a financial planner. Please do your own research, and if you're new or learning options, I do recommend that you start small. All right, guys. Hey, we started the week. Let's see. This is the Trading View S&P 500, the SPX, and what we are showing is the chart. Let's look at the 5-day for last week. Here's the 5-day for last week, and we started the week at 44.50 over here, and we ended up at 43.20. So a consistent down move for the week. We were up 14% this year last week, so now we're closer to around 11%. If we look at the going back through 2009, you can kind of see the different trend lines that I've drawn, but I do think based on the trend lines that we're still, we're slightly overvalued in the market. So that's why, I'm doing, for instance, these SPX trades. I'll get into that when we go through the individual trades, but I don't mind being short because I did think that we were due for a pullback when we were up, so much so quickly early in the year. So if we look at the year to date, and then we kind of spread it out here, look at the chart, you can see, yeah, we're still up year to date, and this is where we get the 11%, but we did just have the pullback. Interest rates, Fed Jerome Powell came out and spoke last week, and he mentioned that we were going to have inflation for a little bit longer than expected, and basically he's not opposed to keeping interest rates unchanged for longer, and right now they're at the 5.25 to 5.5 mark. This date that we've got right here is, I believe, June of next year. Yep, June. And in June, it's still expected to be 5.25 to 5.5. And same with all these. No change, still 5.25 to 5.5. It was June that we were expected to have the cut, last week when we did our report, but now it's moved out to July. July would be the first, according to this Fed rate watch tool, which is pretty accurate, and it changes week to week. So there's a 34% chance that there would be a cut in July of next year, so a little bit further out. If we go to the FactSet earnings insight report, and we look at page 1 of the report, we can see Q3 estimated earnings growth of just minus 0.2%. 12-month forward PE of the S&P is 18 right here under valuation, and that's below the 5-year average of 18.7, but above the 10-year average. So PEs are just about where they should be, it looks like. And then if we go to page 11 of the report, we can look at calendar year 2024, where analysts are projecting earnings growth of 12% and 5.6% revenue growth. So back to normal for next year. But for Q4 of this year, it's 8.2% earnings growth and 3.8% revenue growth. So still pretty good, it looks like, moving forward towards the towards the end of the year. And then if we go to let's see, down here further, I like to look at the PEs of some of these on page 28. Let's expand it a little. But you can still see energy is still a good value. So I do have uh, I believe we've got Chevron. We'll see when we go through, but Chevron and ExxonMobil are the two that I like to buy. One was a little bit higher than the other, so I think we've got CVX, Chevron. But energy is still a good buy at 11 PE versus 15 PE 10-year average. Sorry guys, I've got a cold, so I'm kind of on the struggle bus this morning. But hey, we're gonna get through this, and I enjoy doing this, so the show must go on always. But yeah, it's a little cold. Um, and then I still like the financials. There's a lot of they're saying financials aren't gonna be good for a while, probably till beginning of next year. But I don't mind owning some leaps and or stock in some of the financials. Real estate, uh, it's got a forward PE of 15, so a little bit lower than normal. But I think real estate, uh, we've got some real estate, so we'll cover that. We've got, I think, Lennar and Toll Brothers Home Builders, um, and MPW, the Medical Properties Trust, Real Estate Healthcare REIT. Uh, Communications services came down a little bit, so some of these PEs came down a little bit, and they're a little bit better buys. So let's look at the sector spiders. Now this was kind of ugly. Last week was a tough week. All the sectors red all the way across for the 5-day. Biggest drops in consumer discretionary and real estate. Actually, I put on a consumer discretionary trade last week. I actually was going to do a video on it, and then I kind of got sick and didn't put it out. So I'm going to put that out this week. It's in XLY, actually, this consumer discretionary stock, and or it's an ETF. And you can see AutoZone, O'Reilly, some of them that the consumer discretionary carries. Some you've got Lennar, the home builder, Ford. Um, but we've got that video coming out, and it's basically betting against it, because if you look at the year to date, it's still up 25%. It was up 30% last week though, and I made money and got out of that trade right away. But again, I'm going to put it on again. Hopefully there'll be a little tick up on Monday and we can throw it back on. But communications and technology are up year to date. And then everything else is pretty flat. Utilities is down a little. I've got a long utilities trade on in XLU as well that we'll cover. Uh, so with that, let's go jump into the trades. I put on a new trade in oil just because it was up big. Let's go to positions. Yikes, sorry. Um, and then if we look at oil, yeah, it was up on Friday. It was up a percentage point when I put it on, but it also, if you look at the chart, it's at highs and it's way above the 200-day and the 50-day moving average. I actually added these to the charts. I kind of like it, the 200-day and the 50-day moving average. Um, and there is a video that I released last week on technical analysis, so I'm using that more. And moving averages is covered in that as well, so check that out. But I put on a call credit spread, sold it. Um, if we go over here, oh, futures is not covered in the, if I go to the change yet on Tasty Trade. All the other stocks are, but not the futures. So we can't really look at that. But I've already made 33 and we've got 126 left to make. So I put it on for one, if you add those up, 59. So basically $160. So close to one third the width of the strikes, and was betting that it moved back down. And I'm long oil, but geez, it's up so high at $90 a barrel right now. I just kind of played it the other way. If it moves down, I'll go long arrow probably and have the iron condor on. Advanced auto parts, long. It's with the big move down, we're still actually positive for the week. If we look at the curve and the analysis, uh, you can see we're still in the positive range. As long as it stays above that 55 short strike, we're gonna do okay. Corn we did trade out of. I had that on, and that was real good for us. I'll look to put that on any down day. I passed that in the corn futures, but it was at all-time lows, and we made good money and closed out last week. And I can't show you on the chain, unfortunately. But advanced auto parts, 57 down from 59 from 67. But again, we're still profitable. Adobe, good long-term stock. It had a move down. I actually rolled out my 515.05. That was in October, and I rolled it out when we had the big down move last week, just to kind of split this up because I'm still in the profit zone in October here on the Iron Condor, the 490, 500, 550, 560 Iron Condor, but I rolled out my other put spread since it was in the money. I just didn't want to take a chance. I mean, we've still got 26 days in October, but I rolled it out to November and collected a little, probably very little premium. Let's see. Yeah, 24 bucks when I rolled that out on the 21st. So, midweek. But let's see. Yeah, so Adobe, that's where we are. AMD, we've got an Iron Condor on. It moved down quite a bit. Wow. Yeah, below the 200-day moving average but AMD's a good company, good stock, and it should do well. Definitely going forward. Good stock to trade for options. If we look, in the last 30 days, we made $285 and 400 in the last 60 days. So we've been trading that pretty consistently and doing pretty good. We need it. Yeah, we need it to move up a little bit to be profitable going forward. If it doesn't, I could roll down. Well, there's no reason to right now. I've still got $148 left to make in this 105 call with the 81% probability of profit. I'm gonna hold where we're at in AMD right now, but we do need a little bit of a jump up. Amazon, this is the beast. I'm not gonna short Amazon. I don't think almost ever. Uh, Everybody uses Amazon. They're dominant. I was watching some other YouTube videos on why it'll get to 200 in not very long, and I believe it as well. They're dominant, but I'm going to stay long probably all the way to that 200. But right now, we're $10 below my 140 short put, and we need to move up, which hopefully we'll get soon. But if not, I'm in October. When I get to 15 days or so, I'll just roll that out to November and likely collect more premium. Bank of America is a leaps option. We've talked about this. I'm not going to focus too much on the financials. They haven't been doing great, but I'm long with leaps on Bank of America and Wells Fargo, and long term they're going to do well. Any big up move, I don't think they're going to start doing really well until next year, the beginning of next year. And any big up move, I'll put on a call to have a poor man's cover call on. Costco, we've got $5 wide Iron Condor. We are right in the middle, but we've got earnings coming up on the 26th, so next week. So I may readjust in center, but I think, yeah, we're right in the middle on that. I may even throw on another trade this week, depending on how it goes. And I actually probably am going to be going to Costco here, and then after this video, need to pick up some things for the week. Chevron, this is the oil stock that we have. Let's see. Yeah, it's not at the top of the range, so that's why I am long Chevron. They're going to continue to do well with oil prices where they're at right now. And it's nice to have some oil commodity stocks, but Chevron is a good one. ExxonMobil is the other one, but when I looked at that, I like to be long, but you can see it's up near the highs, so that's why I like Chevron a little bit better. And DraftKings, I'm glad I had these calls on because we're making money on the calls with the down move. But this is, two poor man covered calls. So we've got the leaps and then the calls that we sold against it. So, what's nice is I like DraftKings long term. They're dominant in the online gaming, and they're getting, more states are being legalized. And as the stock price will move up and these leaps will make money over time, but in the meantime, it's nice to have on a call and just make money every month, month after month, income uh, by collecting that premium, and then just while waiting for it to move up. As it moves up slowly, hopefully in a year you've collected enough premium to own that leaps or the control of 100 shares outright. So that's kind of the plan with the poor man's covered calls. And I've got to make a new video on that uh, coming out. If we look, 300 over the last year, we've made what, $788 in DraftKings, and in order to buy one of those leaps, it 481. Let's see what a leaps cost. If we look at that, and a little bit more expensive than I thought, but anyway, 800 bucks helps with that. It's almost half the cost of one of those leaps. Uh, Dollar Tree. Ooh, this one got hurt last week. Uh, I looked it up as well. I think I put this on as an earnings trade and kind of got stuck. We collected the premium. Wow, IVR is still high. I thought with possibility of a recession and inflation not being tame yet, that Dollar Tree might do well. But looking at the financials and digging a little deeper, I'm not so sold on Dollar Tree. So I'll probably just close this out next week. That's why we do our research, guys. I should have done mine. DocuSign, 47.5. I did do my research on these guys. I like them. Getting hurt in this right now. IVR is a little low. Um, it had a pretty big drop last week. Yeah, down here to 41. So I'm going to stay long. It's way below the 200-day moving average, but I'm going to be long DocuSign. Any good stock like this that's going to be good long term, I'm just going to continue to roll this vertical spread, or maybe sell another put. Enphase, uh, this has stayed right around that 120 level, it seems like, for a while. It's at the lows. I like it long term. Um, I'll just continue to roll out, but we do need a little bit of a move up in order to stay profitable. FedEx. This was an earnings trade that we had that we put on last week. I did an iron condor and they beat, so I adjusted and I adjusted a little and centered the put up. Let's see. Yeah, so we had the iron condor on, and then it moved up when everything else was moving down up to 260, and I closed out my 225, 235, and rolled it up to the yeah. I rolled my my 245, 235 up to the 27. Uh, what the heck? 225, 235 up to the 245, 235. Okay. And now I've got the 225, 245, 270, 280. Okay, so this is $20 wide now on the put spread, and I'm $10 wide on the call. Interesting. Okay, but what did I collect? Uh, Another 43. This is interesting. So 290 plus 93. This, for some reason, looks like it's off a little. But anyway, we're in the middle of the range, so we should be in good shape. I'm going to take a closer look at this one, but FedEx should be a winner. Lennar, the home builders, 110 to 125. We're right in the middle of that range. We've got the iron condor on. We're gonna hold that. We don't have earnings coming up. We're at 26 days to expiration. Let's just let that premium come in next week. Medical properties, they're way down 5. I'm holding long. We've talked about that one before, but healthcare REIT, huge or a big dividend. I think they may have cut it. I've got to look at the news on that. I heard that they cut their dividend, which is fine. Just for safety reasons, it's still a big dividend, but I think that they're going to come back and be fine. Oracle, we've got the 110 short puts and then the 115, 125 call vertical spread. We need a slight move up, but we've already, this was an earnings trade that kind of went wrong, but I think we because of the down move last week, we moved back down a little, but we just needed to move up, not too much, from 109, and we just had a big up, to the 110 above range. But we're actually still in the, if we held this to expiration, we would still be profitable because you can see here we're in the green profit zone. So we just need the time to pass, and then we'll profit as this premium comes out. But you can see we've still got $364 left to go, 26 days. So I like the position that we're in right there. Palantir, it's been trading in a range. It's down to 14 now. Wow. Yeah, way down. But I like it anywhere from this 14 range up to the 20 range, and I'm going to keep trading it in that range. I like the stock. I've done some videos on that, on digging into the fundamentals and the news and the technicals. PayPal 6560 put vertical spread. It's at $57 from 64 last week, so it was down. Everything got hit last week, guys. So I'm not super worried about it because it will come back, and they're already at lows, and so I'm not worried about them dropping too much further. But I will look to roll this out. Expiration. So if we were to roll it out to November right now, yeah, it would still cost us money right there. So we wouldn't want to roll it yet. We need a little bit of a move up in order to roll it out. Otherwise, I would probably just close it out. I may put it on again or may not, but we'll see how that goes. We've got some time left. SoFi has been down. Guys, I picked up another Leaps option, bought one last week. It was down like 5% late in the week, and I kind of sort over here all my positions, and I look at something, and you can see right here, SoFi. It's the worst one, 5%. So I'm thinking, okay, do I want to be long SoFi? Yes. And it's on sale right now. So then I went ahead and I purchased that on the 22nd. So it was that Thursday for $4.95. So it lowers my cost basis. You look at my cost basis for all these, and it's just being lowered and lowered. So any big move up will make up this $1,400 quickly. But long term, these guys are going to be great. We own 300 shares outright and 8 Leaps options. So that's control of 1,100 shares of SoFi. SOXL is a semiconductor ETF. 2320 put spread and 18 put, rolled that out to November. Long the semiconductors technology, but it has been hurt it got hurt pretty bad last week. So SPY, I've just got an iron condor on here. It's down near the 430. It's near the bottom of the range. One thing that we did talk about was SPX. Well, actually, I'm going to save SPX for last. TDOC, I thought about buying another Leaps last week when it was on sale. Yeah, it was down a little bit to 2 3/4. If it's down again next week, I'm definitely going to buy another Leaps option in Teladoc. But we're long Teladoc. Needed to move up to the 24 range in order to be profitable, but we've got plenty of time when the market turns. TLT 94 put spread, it's down as well. So not only were stocks down, bonds were down. My goodness. But I am long bonds. Toll, 80. We had a big drop last week and everything, so Toll Brothers went down as well. And we're just gonna wait and see if we get a bump and then close that out. Or something like this where it's down below both strikes, you can just let it expire worthless. But we've got time here, so we'll look at that next week and maybe make an adjustment. Verizon, it's got a big dividend on the share. That's why we own the shares outright. Wells Fargo Bank, we talked about that. We've got two leaps and sold a call against it at 42.5, so making some extra income on the poor man's covered call. And then XLU, I've got a 63.66 call debit spread on. Yeah, call debit spread. So this I was hoping would move up. That's going to be profitable as we move up. And low IVR, that's why I did a debit spread. I'm trying a new strategy on that one. We'll do a video and talk more about that. And I've got an XLY coming out as well. But you can see on XLY, last week I did a debit spread, hoping that it would come down because that's consumer discretionary. And you can see we made a quick from the on the 18th, a quick $122 just in one day, trading that. But I'm going to put this on again next week and go through what I'm doing there and the strategy that I'm following. So SPX is the last one. Let's touch on that. That's kind of how I hedge against the rest of my portfolio. If you notice, most of these are long or a lot of iron condors, so we did get hurt last week. But with SPX, actually, because I'm doing call credit spreads, we did pretty good. Just in the last 30 days, we made $2,300. And you can see last week when we started the week, I think the 18th, we sold a call credit spread for $285, $5 wide. We did not, what we needed to do then was at the end of the day, it was not profitable. So I rolled it to the next day and I widened it. I doubled the width to $10 wide and collected another 60 bucks. I then closed it when it was down. I didn't wait until the end of the day. I closed it at 6:32 right when the market opened, and for 340. So I only made $5 on that whole trade. Not good. I should have. It kept going down. I could have made a lot more if I waited. So I'm still defining my strategies and the way that I'm handling this, but I wanted to take the risk off the table so I could get back to $5 wide. So that's what I did there. I put on the 19th before the end of the day. Well, actually, looks like right after that, 9:41. Wow, I threw it back on. $5 wide at 275. Had to roll it again. This time collected 50 bucks. This time waited until later in the day, 12:30, and I closed it for 60 cents. So this time I learned and I made $265. Um, and then on the 21st, did the same thing, $5 wide, and it expired worthless, made another $265. Then, so doing pretty good for the week there. Then put on at 12:30 a $5 wide for 265 and closed it. And that was the one day, and closed it on the 22nd for 35 cents. So another $230. So we did really well playing the other side with the market moving down. And between all of those, the 230, the 265, and the 5, we made 765 for the week on the down move in SPX. And again, if you remember, the reason that I like doing this is when we look at the SPX chart long term, I still think that we're a little bit high, and we could maybe come down to either this trend line down here before the end of the year or this one. This will be the first one, but I still am comfortable having on a short position against my long positions. And again, I'm not going to get too big. So after I get to that $10 wide, position, then if I'm probably not gonna go $20 wide, because that's going to allow me to lose $2,000 instead of 1,000 max loss. And what I would rather do is roll that 1,000 or that $10 wide position out, even if I've got to go a month out. So now I'm all of a sudden going from 0 DTE or 1 DTE out to 30 DTE, which is fine because it still gives me those negative deltas. So I can go out 30 days, not have to worry about it, not have to worry about it, a $20 wide, $2,000 loss, and keep it on. And then on any big down day, go ahead and sell it because it's going to be profitable as well. Even though it's 30 days out, it's going to profit just, not quite as fast or as much as a 0 or a 1 DTE, but it will profit. And then I can take the profits in that. So there we go. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Let's get the video out to as many people as possible. Really appreciate you watching. Let me know in the comments below any questions that you have. Let me know what you're trading. I will respond to every comment. All right, guys, have a great week. And we've got some great earnings. Almost forgot. We've got great earnings trades next week as well. So Costco, Paychex, Micron, Accenture, CarMax, Nike, and Carnival. So I'm going to look at those and maybe put out a video on one of those this week. So keep your eye out. Have a great week and see you in the next one.